Oh my God, I'm talking. So I'm talking and nobody's hearing me. Okay, so now so yeah, so while everybody's hopping on, I appreciate you guys hopping on. I know it's like right before the holidays and stuff. So I'm gonna just go over the pitch today. So I pitch every Monday night for my fund. It's called the Self-Storage Fund of America. And I'm going to show you guys the offering. I'm going to kind of show you, I'm trying to raise money for the storage facility. So we've bought 2 storage facilities so far in the fund, and we're trying to raise money for the 3rd storage facility. And that one is in Carrollton. So Carrollton, Georgia. So I'm going to go over that one right now. And let me see here. And so we'll give everybody just a second to hop on, and then I'll kind of get right into it here. So let me see. I'm going to pull all my stuff up here so everybody has it. Okay, there. So I got everything all opened up here. Okay. There it goes. Okay, so if you haven't been on the pitch before, I just wanted to introduce myself. So I'm Stacy. My husband is Pete, and we have been investing in self-storage now since 2017. We started looking in 2016 and bought our first facility in 2017. We focus primarily on the Georgia, Florida area. We're about to buy 1 storage facility in Tennessee. So let's see how that one goes. All right, but for the fund, our focus is Georgia and Florida. We live in Tallahassee, is where we live. And so for us, like the panhandle of Florida, all the way down to maybe Orlando, and then all the way up through Georgia is kind of our area. Actually, I'll show you kind of like what it looks like so you have an idea. So you can search. We have 13 storage facilities that we own and manage, 2 of them being inside the fund, and then the other 11 are like our personal ones. Okay, so I'm going to share my screen and I'm going to just kind of show you so you guys can take a look. Y'all can check me out, check everything out that we do. So yeah, so if you look up Miss Lillian self-storage, then you can see that here's all of our facilities that we own. Get this thing out of the way. It's annoying me. Okay, so yeah, so we have 2 down here, and that's in Live Oak, and then we have this one here, and then this is Valdosta. We have some in Atlanta, then we have the North Georgia. We kind of have them separated into, like, it doesn't look like it, but they're really like, what we do is we build like portfolios, mini portfolios, and then we kind of cluster them together to make, like, because we buy like facilities that are typically around 100 units, and so then we buy like, you know, maybe 3 or 4 of those in an area, and we try to get to like 300 or 400 units is what we do, and then we could sell those later as like as a mini portfolio. That's kind of our thought process. All right, we haven't sold any properties yet, but you know, because you know we don't want to sell them. We want to hold on to them, right? But next year we are definitely going to try to sell a couple of them because we're trying to get some, you know, some cash so we can like put money into the fund, and then we can also buy some more facilities because there's like so many amazing deals out there. And so, you know, that's the whole purpose of this fund too, just so everybody knows, is that we buy severely mismanaged facilities. There's like 2 types of mismanaged facilities. One of them is where like the owners have not raised the rents in like years. So the first facility that we bought is for the fund, and our brand for the fund is Mission Self Storage. Okay, and so we have Mission Self-Storage in Georgia. Let me just show you the 2 that we have right here. Yeah, so here's Blairsville. That's the first one that we bought. This is what it looks like. Yeah, this is what it looks like. Okay. Oops, oh, I'm not even touching it. It's just kind of doing its thing here. Yeah, but there's indoor climate control, and there's indoor climate control, there's outdoor storage. So this is the first one that we bought. And then this is the second one that we bought. We just bought this one last month, and we just claimed this. So we haven't put any pictures up. We just got it this past week, so we're working on it, but that's where it's at. So these are the 2 in the fund, and so let me just give you kind of like a synopsis. So the Blairsville one, and we go by like, the when we say Blairsville, we go by the city like that it's located in, is what kind of how we say stuff. So Mission Self Storage Blairsville is up here, And so the owner, this one right here, the owner, it's 135 doors, and it's like 20,000 square feet or something like, no, not 20,000, 15,000 square feet. I can't remember. But the owner had not raised the rents in 15 years. He had not raised the rents in 15 years. Can you imagine? So, so he was getting $20 for 10 by 10s. $20, and the market calls for $100. So he was making like between $8,000 and $9,000 a month is what he was making. And when you run the numbers for this facility and what the market calls for, he should have been making like $25,000 a month, like between a minimum of $20,000 to $25,000 a month. And let this guy in. And so that to me, so that even though it looks and mismanaged doesn't mean it looks like crap or anything like that. And mismanaged just means that like it's not properly managed. And the owner, it was a free and clear facility, and he just owned it for so long, and he did not. And it's like, and it's in Blairsville. But if anybody knows anything about the North Georgia mountains, it's like, it's a very, very like sought after place to visit and live. Very touristy, very expensive area to live. It's like just the mountain, the North Georgia Blue Ridge. It's the Blue Ridge Mountains is really what it is. So a very nice area, and all like everybody in Atlanta, they buy their house. They buy a house if they're gonna have a second house. They buy it like in the mountains up here, kind of how it is. Okay. And so there's a lot of second homes up here and stuff, and a lot of like RVs and like RV parks and stuff too. So but he was charging $20 for a 10 by 10, and then he hadn't raised the rents. So obviously we bought this facility, and let me see, we bought this facility, and this is ours now. I mean, that's our sign. Put the QR code on there and give it a try, see if it works. And I mean, it really honestly doesn't need any work at all. I mean, except for it needed gates. He did not have gates. We put brand new gates in. Those are all pretty much done. We're paying, or we got all that finally done. And this is the indoor storage. And look, there's even room to add more, like add a whole nother row of storage facilities right there. And I hear somebody talking. Get a question?
Yeah. Are you sharing anything? Because I'm just seeing you.
Oh, crap. Sorry, guys. Thank you. So here's what it looks like. Thank you. Let me know if you can't see myself. Okay. Yeah. So this is what it looks like. This is the storage facility. That building right here, this is the climate control. All right. And then you could see this. We could add units right here if we wanted to. There's a lot of space on this property. Okay. This is what it looks like. And this it's like 2 lots. So we had to put 2 gates in. Is what we did. So there's like a brand new gate. He did not have any gates. He had it fenced in, but he didn't have a gate. Okay. So yeah, so this is what it looks like. So yeah, so this is the one that I told you about. We picked this one up for $1 million. And he was making like $9,000 a month or something is what he was making. And he gave us the tax returns and stuff. I mean, he was making like $120,000 a year. And but he should have been making like $25,000. It's almost like $25,000 a month is what he should be making on this. So essentially he was just leaving a lot of money on the table. So what we did is we bought this thing and we raised the rents. And so obviously when you raise the rents from $20 to $100, you like piss a whole bunch of people off, right? And so out of like all of our tenants, we had 30% leave. Right. So that's pretty good though. When you raise your rents from like, you really like triple the triple or quadruple your prices. The question is who's going to leave. We tried gradually raising rents, and then we tried what we call ripping the Band-Aid. And the truth is over time, what we learned is that tenants do not like their rents to be raised. They don't. So when you're having to come in and every 3 months raise your rents, then it really just kind of just makes everybody even even more mad, So we've learned over time to just do like rip the Band-Aid. If you don't want to pay the price that we want to charge, then you should just probably get out now, clean out your units, so that way we can get in there and just list the price where you want. And it's so funny because like we raised the rents from $20 to $100, and then within a month we had 10 new tenants. Like 10 new tenants would pay the $100 a month. And so like, I think, that's one type of severely mismanaged facility to me. Okay. Now, how do we find these facilities? Right. So internally, I have 10 virtual assistants, and what they do is they work for me, and they just call owners and talk to owners directly. Okay. And then we try to like find owners that, want to work with us. And usually they're just like super nice people that, they're just kind of tired of their storage facilities, and they're okay with working with us. Yeah. And so that's kind of how we found Blairsville, is we just called him up, and he said, yeah, I'll sell, and then we went out there, met him, and introduced ourselves, and closed on the deal, raised the money for the fund and closed on the deal. A really, really nice guy. And he was just old, and he just couldn't manage it anymore. So he just sold it to us for $1 million. And I'll show you the numbers in just a sec. And then the second type of deal that we look for is like a mismanaged deal that's like, it's like needs work. All right. The facility itself needs work. And that's what we got with the second facility, the Macon facility. And I'm going to show you that one here in just a second. That facility is like, I don't know if you know anything about Macon, Georgia. Macon is just one of those towns. It's a big city. It's like 200,000. The metro area is like 200,000 plus people. Okay, so it's a very good populated city. We bought the ugliest storage facility in the city, is what we did. And it's on 6 acres, and it's 171 units. And I actually drove over and looked at it, and it is actually really not, the facility itself is in good shape. It's just that he painted it like this like god awful color. Like I would not want to put my stuff at this place just because it looks so horrible. And then also he never, like when somebody didn't pay, he never did auction process. He didn't do any auction process. He just like took people's stuff out, which is illegal anyways. And then also what he did was like if something broke, like if a door broke or a latch broke, he never fixed it. So he has like 171 units. So it's on 6 acres. This is a massive, huge property. And then but only 90 of them are operable. And he supposedly has 55 tenants. So he's not full and 100% full, but he was like halfway full, let's just say, from the 90, not the 171. The 171 doors are like broken, full of crap, need help, need work, or whatever it is. Okay, but out of the 90 that he could use, half of those were like filled with somebody's stuff. And so, but then only like some of those people were paying. That's it. So not everybody was even paying. So basically this owner was running this facility to the ground. Okay. And so that to me is like a severely mismanaged facility. And those facilities actually we buy all the time. And so my husband, he's the type of person, he's like hands-on, right? So he's like the guy that's gonna, we're not hiring a management company to go out and fix this stuff. Like we're the ones that do that. So he will have a team come in, a crew come in. They will spend like several weeks at one facility, just getting it up and running. He's gonna have to paint this, fix doors, fix latches, maybe grade, put some gravel down, this kind of stuff. So he's the GC kind of is what it is on the deal. So that's kind of how he is. That's like his personality. And so we don't hire third-party management to manage it. Like we have a management company that like manages all of our facilities. So we manage 1,300 doors, and our management company really manages all that. So then my husband Pete is the kind of the top person for the management company. I find them and I fund them, and then he runs them. Okay, so he has his whole team, internal team that kind of manages all the phone calls and auctions and operations and stuff. And then he has like his boots on the ground people. And the boots on the ground people are the people that go there and like, get their hands dirty and like fix stuff and things like this. Okay, so that's kind of how it works for us. That's our model. And so the facility that we have, let me see if I can share my screen and I'll show you this. Yeah. And then you could go down to the Macon one. I don't know why quality A storage comes up, but this one is ours down here. And let me see. I'm gonna just zoom in so y'all can kind of see this one too. We just claimed this, we just closed on this like a month ago. Okay, and we're going to close on one storage. We're trying for one storage facility a quarter. So we closed on one the third quarter, and then now we're closed on another one the fourth quarter, and now we have one for the first quarter of next year. Okay, and that's what I'll get into in just a second. But this one is the one that we just closed on that we're trying to just get going here. And this is what it looks like. Let me just let me see if I could just zoom in a little bit more. That looks better. Okay, maybe it was too far out. Yeah. Okay, there. Okay. There you go. Now you're talking. Yeah. So here's our storage facility. Let me swing on down here. I could tell by this blue, this god-awful blue is what he painted it. And so you can see here. I think he said he just wanted to be spotted from from Google Earth. And so the gray is actually really not too bad, but the blue is like horrendous. And so that's kind of what it looks like. And then also he only painted one building because he ran out of time and money, he said. So he didn't paint these buildings back here as well. So it's like brown and then blue. So it just looks like completely horrible. But this is the facility. Somebody's riding their bike. And we already changed the signs over, and we're just in the process of really just getting it like cleaned up is what we're doing, trying to get out there and start working on it. And we'll do that in the beginning of the year. Okay, so that is max. That's the one that's 171 units. Let me back out and I'll show you what it looks like in satellite view. So you can see here's the facility itself. It's a very huge facility. And then the acreage goes like it's all this area right here. This is included into the whole deal. So it's like this kind of weird shape right here. And you can come in like off this road. There's an entrance in the back over here that you could come in and go this way as well too if you wanted to. But it is all fenced in. And really nice camera system, nice fence gate system. I mean, he really he tried to fix it, but then just wasn't like in the right places and stuff. Okay, so that is Mission Self-Storage Macon is what that is. Now we are in the process of raising the money for the Carrollton one. And so Carrollton is a suburb of Georgia. Of Atlanta. So let me get out of here, get back over here. It's $1.4 million, and it's right here. Here's Carrollton. Okay, so here's Atlanta. Now remember when I showed you Miss Lillian's self-storage, that's our personal facilities. Remember, now we own 4 facilities right in this area, right? So for us, this area is a very familiar area. And in fact, the person that manages these facilities will be able to just manage this one as well too. So that's our boots on the ground person. And so you can see here, we'll be able to add this one right here. And it's called Able. Let's see if it's Able Self-Storage. Yeah, Able Self-Storage in Carrollton is what it is. So that's this one right here. So you can see it's right here, right in Carrollton. Great location, right in downtown Carrollton area. And so Carrollton is like a suburb of Atlanta. I would consider it to be like a subprime market is what I would consider it to be. So you can see we're going to zoom in here. And so this is what it looks like. Okay, so there's a big, huge, like kind of, I would like to, if we can raise the money for that, I would really like to make this into climate control. But right now it's like six separate 2,000 square foot, individual like spaces that are rented out. He rents out that 2,000 square feet. He rents them out for $500 a month. That's it. And then here's all the storage right here. So this is all the walk-up storage or the drive-up storage. So I'll just pull this down here so y'all can see what it looks like. And this guy's really nice. His name's Morris. We got this under contract for 1.425 million. He's making about 125 to 150,000 depending on which P&L you look at, which stuff you look at, because he's all over the place. But yeah, so this is what it looks like. So you can see here it's got these he rents these out for like $500 a month. And then this is all the storage right here. So it's really actually in too bad of a shape, but he's not making what he should be making because Carrollton, this market is like super hot market, and he is not charging what he should be charging at all. In fact, we picked it up for 1.4 million. It's really worth about $3.5 million. And that's not making this into climate control. That's just leaving it as is, raising the rents, getting it cleaned up, and I was thinking also that we could maybe we could also fence this area in and put it into to parking. We could also do that as well too. So there's a lot of different things that we could do, but this is what it looks like. And so we're trying to raise the money to purchase this one right here, and I'll show you the numbers on that. So if you go to Self Storage Fund of America, I'm going to put this link into the chat. And so that way you can go. You have to ask for access as an investor to see everything that I'm going to show you. Okay, but so make sure that you do that. But go to the Self Storage Fund fundofamerica.com. And then you'll be able to kind of see what it looks like. So that's like, if you go to this website, this is what it's going to look like. You're going to want to access the PPM. Once you access the PPM, then you're going to fill all this out, and then you're going to get access to the PPM. All right, that's it. All you do is you get access to the PPM. What you want to do is you want to get access as an investor, because as an investor, then which is the next status, like the next level up, right? You can see here, if you create your account, you get access to the PPM. But if you upgrade to investor status, then you get access to documents, quarterly reports, and then also the subscription. So make sure you do ask for that next level up. And so, and then as you can see, the PPM, all you have to do is just go here to read the PPM, and you can view that. And you can check out, the PPM here. It's just an e-doc that you can read through. You can download if you want to. You can read through it, okay? And then, and the operating agreement is also in the PPM, okay? So you have access to that as well. And then I just clicked on documents is what I clicked on right here. And this is where you'll have access to the supporting documents, and then also the quarterly reports, because we haven't had an annual report yet. We just had our first quarterly meeting like last month, right before Thanksgiving. And so you can look at that quarterly report here, and then you can also watch the replay of that meeting if you want to. And inside that meeting, Adam is our fund manager. He's the one that he goes through like what's happening inside the fund. Then he also goes over the financial model, which I'm going to show you as well too. Because the financial model is where you can input how much money you want to put into the fund, and then it will show you how much money you're going to make based on how much money that you invest, okay? Based on like how our fund looks right now. I'll show you that here in just a minute. And then any supporting documents that you need are going to all be here, right? So the ABLE self-storage executive summary is the one that we're going to buy right now. And then the Max one is the one that we just closed on, and the American Mini Storage is the one that we closed on, the Blairsville one. And the investor presentation is where the offering information is. I'm going to go over that here in just a second. And then here's the fund manager, Adam, explaining the financial model. So it's like 20 minutes of video of him going over how to utilize the financial model if you want to take a look at that. So everything that you need is in the supporting document. So make sure that you upgrade to investor status so that you have access to the supporting documents. And then that way you can get in there and run numbers, look at the offering and stuff, okay? And that's the financial model is right here where it says the updated financial model with investor projection tab. So I'm going to download that and I'm going to show you just like how we use that. And I'm also going to get into the investor presentation. And the investor presentation is actually this first page. So it's right. The investor presentation. That's what we're going to look at right now. So I just wanted to make sure that you knew where you could find everything once you get into the portal. Okay. It's all under the supporting documents or under the quarterly and annual reports. Okay. So everything's right there. And so now and then here's the investor. This is our slide deck, but this is just really like us going over the offering, what we're doing. And so for this offering, what we're trying to do is raise enough money to buy anywhere from 6 to 8 storage facilities by the end of this year. And we already bought 2, so we need to buy at least 4, if not 5 or 6 more. But we're shooting for 1 a quarter. And typically our properties will be around $1 million. And we spent quite a lot of time looking at the 11 storage facilities that we own personally and creating the financial model based off of those 11 storage facilities, because essentially what we're doing is just taking the 11 facilities that we own and buying, 6 more of those facilities, but buying them in the fund. Okay, so the Blairsville facility and then like the Macon facility that I showed you, those are exactly the same type of facilities that we own personally as well. All right, so we're not going off, we're not taking the path less traveled. We're only working off of what we do. And what we do personally is we buy severely mismanaged facilities and we stabilize them, and we either sell them after they're stabilized or we refi and hold them for a couple more years. Okay, so that's our two exit strategies. And depending on what's, where the market is in the next 18 to 24 months is really going to determine what we're going to be doing with these facilities. Obviously, if the interest rates are going up and up and up and they don't come back down, then refining out is going to be, not a good choice, right? We don't want to refi out if it's like 10% interest. In fact, for the fund and for the model, we're running all of our numbers at a 7% interest rate or lower, right? So we have to have at least 7% or lower. We have to have a 65% LTV. So, so we're not going to refi out if it's going to be something that's going to be higher than that. So then we'll just hold on to these, and then you can run your numbers based on our targeted IRR, which is right here at 19%. Okay, the targeted IRR for the fund is 19%. So I just tell everybody, like, run your numbers and shoot for 19 or 20%. I will not put anything into the fund that cannot achieve this IRR. All right. Now, hopefully we can get a better IRR. If we can leverage our money, then we could definitely get a better IRR, but the truth is the market is just wacky right now. So I'm not going to put anything in jeopardy just so that we can, refi out and give everybody a distribution. Okay. All right. So that's it. So we're shooting for $7.875 million. The 19% IRR and the 5 years with a 2-year extension. So that means like whatever amount of money that you put into the fund, it'll be a 5-year hold. And that's just because we don't know what's, it takes a good 2 years just to get these things up and running and stuff, really does. Like the one in Macon that we just bought, I mean, it's going to take us some time to get that thing to be turning a profit. And so we ask you to just be patient. Some of the facilities that we buy, like the Blairsville one, I mean, it was already making $120,000. And all we're doing is raising the rents. So it's going to take us like 6 to 9 months to stabilize that thing. And then we'll be able to do a distribution for that. But some of them may be severely mismanaged where they're not making any money at all. And so there is no money to be paying. So we need a couple of years to really fix it up and get it stabilized. So that's kind of what we're asking for, is just like patience. But on the back end, the returns are just like phenomenal, right? If you could just hold out for a year or two. Okay. So the preferred return is 10%. All right. And then the cash flow splits, there's actually 2 different hurdles. So I'll go over the waterfall, but it's an 80-20 split and a 75-25 split. If I can get above 15% IRR, then it's if I can get above, it's a 75-25 split. If I can't get above 15% IRR, then it's an 80-20 split. So just know that. And but I'll be shooting for above 15%. I'll be shooting for the 19 plus is what I'll be shooting shooting for. And then we are co-sponsoring, so we're putting 4% in for every time that we do a close, then we just transfer money over and contribute money as well too. Okay, the minimum investment is $25,000. It's a Reg D. It's a 506C Reg D fund, so that means it's only available to accredited investors, right? And so if you are an accredited investor, that means that you have $1 million of net worth, or you make at least 200,000 or 300,000, depending on if you file jointly, separate or jointly on your tax returns. Okay, if you do not have either of those, then you would be considered a non-accredited investor or a sophisticated investor. And we do have a couple of 506B funds that you can invest in. They do not pay as much as this one does, because this one is going to be where you can make the most money, but essentially you can always put money into those as well too. All right, so I always have something. If you have money and you don't know where to put it, let me know, and I can help you figure that out. Okay. And I've been 100% privately funded since I started investing in real estate, which is in 2010. And I've done over $25 million in transactions. All my transactions are in the PPM, so you can see all the property that I've owned in the last 10 years. And I've raised that money and did all of that myself. So working with investors and and working with what your needs are, this is something that's my specialty. That's why I'm the person in the company that raises the money. So if you want to talk to me directly, I am I have a calendar that you can just get an invite to. You can just email us. You can email Anne. Anne can put her email into the chat. She works with me. It's Anne at stacyrossetti.com. And then we'll send you over our calendar. And then you could just meet with me personally if you have any questions or anything. That is what you like. My days are typically just like meeting with investors, either students or investors, and and working with them. Okay, so this is the waterfall, and this basically is just showing you the hurdles, right? So if I don't get above the preferred return of 10%, then it's just a 96-4 split, and just because we put the 4% co-invest in. If we get above 10%, then it's a 76-4-20 split, right? 20 to us as the asset managers, and then 76 to y'all, and 4% for the co-invest. And then if I can get above the 15% IRR, it's a 71-4-25 split. So 25 to me, 4% to me for co-investing, and then 71% to y'all. Okay. And then finally, the fees. Like I try to take out all the fees. So the only fees that we have are just a 0.625% management fee, which is an annual fee, right? So on $1 million, we'll make $6,250. And an acquisitions fee of 0.50%, right? And those are the only two fees. There's no refinance fee or disposition fee. There is a development fee. If we end up doing any development, we probably will not do development, because what I like to do is I like to stabilize, hold and stabilize is what I like to do. But we put those in just in case something comes up where we need to do something, that we can have that. Okay, so that's the presentation. And this, like I said, this is in the supporting document, so you can go through and check out, it's talking about our technology. It talks about here's some, some typical case studies. Here's the, our pipeline, pictures of facilities. If you wanted to take a look at that, you could. Okay. And then, finally, we have the financial model. So I'm going to open that up, make sure that y'all have access to this. Remember, I downloaded this from the portal, and the updated financial model is what it's called. And so then that way you could you can come in and you can use this to run numbers. So when you look at this financial model, make sure you get access to it. And then you are able to just put in here, anywhere in yellow, essentially, is where you can change your numbers, okay? And it's just based off of the 3 deals that we have under contract right now, and then the other ones that that we'll purchase over the course of next year, okay? And then you have are we going to refinance? And these are all refinancing yeses on, but some of them we may not refinance if we can't get the terms that we're looking for, right? So as we go through over the course of the next couple of years, then this model is going to change. We meet on a quarterly basis. And then we update the model for that quarter, and then we'll send it out again so that you can rerun your numbers based on how much money that you put into the funds. Okay. And then it's really just, and then as we go through, when are we going to refi out, right? 18 months, 24 months, whatever, whatever month that we refi, and we'll be able to change all this. We can change the LTV if that's different, and we can change the interest rate if that's different. But as you can see, as of right now, the model is based on us buying 8 $1 million facilities. And then refining out in 18 months. Okay. Now, if we can change, like, so for instance, like on the Macon one, I say, let's do 24 months. All right. Give us a little bit more time on that one. And I'm thinking about putting, $100,000 in. Okay. So, as you can see, when you start changing the number, I'm going to do it by the end of this year because I want to get like some, some write-offs of my taxes and stuff, right? So then you can see that this slide right here also shows like it changes over time as well too. So like, let's just say that we come in and say, we're not going to refi this one, we're going to turn that one off. And this one, we're going to refi and we're going to do it at, 6% interest or whatever. Okay. So you can come in and change it, and it'll just change slightly. The number interest rates actually don't really change the numbers that much. But you could see that if I put $100,000 in right now, the first distribution I would get would be 331, and it would be 2727 based on the numbers in the model right now. Okay. Now, as you can see here, you have Mission Storage Blairsville. You have Mission Storage Macon, and then you have Mission Storage Able, which is the Carrollton one. And as we go through, right, we'll be able to, we'll update these and update the numbers. But this is basically what the projections are for each of the facilities. So if I look at the Mission Storage Blairsville one, you can see that we purchased it for $1 million. Right, we have $50,000 in capex. We put new gates in, a couple other things. And then it was making $137,000, and we're shooting in 12 to 18 months for $263,000, right? The physical vacancy, the gain loss is taken out, so the gross revenue comes out to, it was at 83,000, and we're taking it to 210,000. Okay, just by raising the rates is really what we're doing, honestly, and then you can see here's our expenses, and actually this one is up to date and this one is up to date because we updated these for the quarter. But so these are all up to date, and so you could see our NOI here was at 44,000, and by 18 months we should be at an NOI of 171,000 minus all of our expenses. But as we do quarterly reports, right, then we'll just update this. Some expenses change or income changes or something like this. Okay, and then you can see here the unit mix, but you can see where we put in right here was the refi. Right, so we're going to refi in 18 months. We have a cap rate of 7. The debt, the origination fee is 1.5, and the refi proceeds is like 1.6. Right, so we'll be able to refi this out and then distribute this money in 18 months to everybody. And that's what the financial model shows, with also the hurdles. You could see here, here's the hurdles on the financial model. You could see the waterfall right here. Okay, so hurdle number 1, and then hurdle number 2, right? And then hurdle number 3. So you can look at the numbers and see. You won't be able to come in and change anything. It's all protected. But you'll be able to see how much money that you'll be able to make based on each one of these updated, right? Each one of these. And as we go through acquisitions 4, it's all based on $1 million properties. Okay, so these are all, that's all. We haven't updated those because we haven't bought those yet, obviously. So these, out of these 3, this is essentially what you're gonna make. Okay, that's what it's looking like. Okay, so that is, and then you could change the date as well too. So you say, okay, I can put this money in like 131. Oops, 131, 2023. Okay, so then it will change the numbers, it'll change the amount all the way through, and you can look at the distributions based on the refi. You're going to be getting this much money out. Now, if we don't refi, right? If we just say, look, we're not going to refi, then obviously the numbers are going to change, right? You could see the slide, the chart changes. Like we're not refining. So you're going to put $100,000 in, and you're basically going to be like, earning your money back. And then towards the end, when we start selling off our properties, that's when you make your money, right? Because if you refi, then obviously you'll be able to get those distributions. But if we don't refi, then once we sell, you'll get the distribution. Okay. So that's kind of how it looks. You could play around with this. You could play around with this, run the numbers, and you could just see kind of what you're going to be making. Does that make sense to everybody on that? So that is available to you in the portal as well too. So real fast, I'm just going to go back into the portal and just make sure that you guys know exactly what to do. You just go into the Self-Storage Fund of America. This is where the supporting documents are. This is where the it's actually on page 2, but it's the updated financial model. That's what I just was playing with. And then Adam is going over it in a video. Fund manager Adam explains how to use the model. If you want to watch that video as well, so just click on that and download it. Okay. And then in the once you go back to the dashboard, you've been able to read the PPM, and then you just play around with the portfolio. You can click on all this stuff if you want to click on, but you want to make sure that you get access to the subscription. You only get access to the subscription in the investor section. So you want to make sure you upgrade to investor. And you can see step 1 is to look at this, to fill out the subscription. Step 2 is to verify yourself as an investor, right? Accredited investor. And step 3 is to wire your money over. All right. And that's all kind of right here. So you can either fill out the subscription like by yourself as like a person or with their spouse. That's this one. You can fill out the subscription as a like custodian from using a custodian, which is like your 401k or your IRA or something like that. Or you can fill out the entity subscription if you're just going to be lending from your company. Okay, so that is basically how those 3 work. And once you click on it, it just takes you right to like DocuSign. Is what it does. Okay. And then you can get in there and fill out all your information. It just takes you through. This is where you put the bank information. This is the contract between you and the fund, is what it is. So the PPM is like a Bible. It kind of just tells you all the rules and regulations and everything. And then the subscription is like the contract. Okay. So that would be your next step, is filling out that subscription. The subscription is like a commitment. You're like, okay, I'm going to commit $50,000 or $100,000. That's your commitment. Okay. And then you're going to go through and we need some sort of like a verification that you're an accredited investor, either your IRA or 401k or a letter from your CPA or broker or whatever you have, just something that kind of says like, or you can send over tax returns to Adam and he can take a look at your tax returns as well too. Because Adam, he manages the fund for us. So you can send him all that. So whatever you want to do to verify yourself as an accredited investor, you can do. And then finally, then this is just click on this and you'll be able to get the wire information. You just wire the money. Okay. And that's really it. So this portal is where we're going to communicate with you, talk to you, and and you'll get emails from us and updates of like what we're doing and this kind of thing as well. And then we'll do quarterly, investor meetings, just going over the fund and how it's working and stuff. Okay. Okay. Any questions on that? Any thoughts or questions on that? Mateus.
Okay, I guess I'm the first one who unmuted the microphone.
Yes. You
I
have a question?
wanted to jump right in. I wanted to leave a few other people for the first question. But so if I understand everything correctly, you're buying the facilities until you've got your 8 million together, and then you just distribute some income along the way, and then around the 5-year mark you start selling off.
Yes.
Until everything's sold, and then everything's distributed with the last sale of the last property.
Yes, exactly. Okay. Yes. And we may sell some off earlier. We may sell, we may refi out some and we may sell some. So it just kind of depends on how the market looks over the next couple of years. Okay,
that makes sense. What's the main difference between the self-storage fund and like individual deals like this Cherry Station that I've seen come through?
Yeah, so the Self-Storage Fund of America it's accredited investors. It's a 506c fund, and it's for accredited investors only. The preferred return is 10%, and the split is 75-25. So it's a better return essentially. Yeah. And then the chair, like the 506B1 is for non-accredited investors, and it's an 8% or preferred return, and it's a 70-30 split. Okay.
Okay. That makes
Yeah, so
sense.
it's a little bit, so this one it's gonna be a better return, but you
Mhm.
have to be an accredited investor in order to
Yeah.
invest in it.
And is the investment term different?
The Cherry Station one is a 3-year term
Okay.
with an option to extend up to 2 years, depending on the market. And this one is a 5-year hold.
Okay. Okay.
Okay.
Makes sense. And in the fund, as you buy properties, is the new money associated with a specific property, or is it just going into a pool and it gets the
It just goes to
return?
it's just like a pool. It's like
Okay.
crowdfunding is what it is. It's
Okay.
not like in like Cherry Station, we're syndicating for that one deal. This
Yeah.
one is really like it's crowdfunding. So it's like pooling the money together so I can go out and buy a facility.
Okay.
But essentially I raise the money and then I buy the facility. I raise the money and then I buy the facility. And I'm trying to raise $1.4 million so I can buy that facility.
Mhm.
And but then overall it's one fund, and however all of the facilities we buy in that fund will create the IRR.
Okay. Okay. So theoretically, if I decide to pitch in some money now, I could add some more later next year.
Yes, definitely.
Okay.
Yes. Yeah, so you can see you pitch the money in, and then in a year you'd be like, yeah, I got some extra money, let me put it in, or you see how well your money's doing and stuff. You're like, okay. Yeah, so anybody that puts money in now will be able to invest, later as well.
Yeah. And you talked about tax benefits, depreciation, things like that. Are you talking
Yes.
about bonus depreciation?
Yes.
Okay.
So Adam is in the process of kind of taking a look at all that. We bought the Blairsville one and we bought the Macon one. So now we have to really just kind of look at those two for this year.
Yeah.
And then whatever we can cost seg or depreciate or do anything that we can for you guys, we'll definitely pass that on in the K1.
Yes, but I'm thinking about 2022 versus 2023. Is there going to be a big difference between investing this month or next month?
I mean, we can ask Adam what the difference is. I'm guessing most likely because we'll buy 4 facilities next year.
Yeah.
Right, so those 4 will be cost segged and depreciated versus like you won't have that much for this year.
Okay, but you still have the 2.
We still have the 2. Yeah, no, we're definitely going to cost seg and then depreciate those for sure.
Okay.
Yes, we have 2 already. So if you need something, you'll get something, but we just don't know what yet.
Yeah. Okay. And as far as income tax, are you going to send out K1s or how is that going to work?
K1.
Okay. K1.
Okay, one.
All right. I think I'm fresh out of questions.
Okay, good.
Thank you.
Anybody else? Any other questions that you could think of? Those good. Those are all the good typical questions. So I think those kind of answered a lot. And like I said, I'm available during the week. So if anybody wants to meet me a one-on-one, and talk about kind of your situation and stuff, then just set a time up, and then we'll just meet and talk. Okay. Especially if you're trying to get something done for this year.
Yeah, I'd like to do that. So I just send an email to Anne.
Yeah, send emails to Anne and she'll send over my link to the calendar.
Okay.
And I'm not working on Wednesday, but I do have some time this week and I'll definitely have time next week for sure.
Yeah, I'm flexible this week, so we'll probably make it work. As far as getting the access to the documents, did I understand that correctly that I would have to fill out the subscription first to get the access?
No, go to the portal, click the link in the chat, go to that, get access to the portal. And then once you get access to the portal, then you'll be able to get access to the PPM and the subscription.
Yes, I can read the PPM, but I couldn't get to all the documents you were showing.
You have to upgrade to Anne help him to upgrade to investor status.
Okay.
So there's like a way for you to say like I want to have access to the subscription. And that's where you get access. It's an investor status. Yeah, it's kind of tricky.
Okay.
It's kind of annoying,
Yeah.
actually.
Mm,
But you have to ask for investor status, which gives you access to the subscription and the supporting documents.
yeah, I haven't found a way to do that yet, but we'll work
And
on
I
it.
think Ann can do that. Ann can help you
Okay.
because she could get right into your
Oh,
account. So just help Mateus go and get in there, okay?
yeah, I'll include that in my email just in case.
Yeah, that'd be
All
good.
right. Very
Okay,
good.
good.
Thank you very
Okay,
much.
awesome. All right. Well, I can smell pizza downstairs, so it's making my stomach rumble. I hope you guys have a great Christmas and holiday, and I'm here if you guys have any questions, okay?
Very good. Thanks for the
Take care.
pitch.
Bye.